What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on these tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. I hope everyone's doing all right with the current situation going on in the world. Hopefully, you're doing what you need to do to remain safe and healthy. That being said, if you want to get your mind off of the broad market and maybe look at a different set of stocks, feel free to sign up for our Swing Trade newsletter. It's completely free, goes out on Sunday afternoon, and it'll be, again, stocks that don't necessarily correlate to the market as a whole. So if you're interested in that, first link. Also, we're on Instagram if you want to check us out there at tradebrigade.co, and we do have a live Discord server if you want to chat with myself and other traders in real time. Starting off on our SPY weekly chart, as always, you can see we did get rejected once again at that 200 SMA on the weekly, and we've now formed a bit of a double top or tweezer top, if you will, right here around our 263 whole dollar level. So we'll mark that one in there. Next thing to point out is that we do have a key new support in here right around 244. If we want to play a nice round whole dollar, we'll adjust that when we get down to the daily chart. And the other last point to make here is that we are still below our resistance trend line. Again, that'll be a little bit more clear on the daily chart. And based on this upper wick, again, this could either be looked at as two things. We are in a bear flag where we see the major trend being down and then a consolidation period here, and now we're going to see another leg down. Or you could look at it in a more short-term fashion where we have a bull flag forming where we have a pull and then it's sort of consolidating up here waiting for the breakout higher. So those are the two sort of scenarios that could potentially play out. On the daily chart, again, you can see that, boom, we are still very much getting rejected by this resistance trend line. We pierced it slightly on Tuesday, but then fell back below it here on Wednesday quite naturally. You can see this large upper wick, and then we sort of consolidated sideways after that. So again, this is what I sort of mean by our 244 key support. We're going to adjust that over just a bit. That way it's sort of more in line with what we're looking at. So I would even call it slightly higher. Right around here, right around 244.50, if you want to sort of factor in some of this price data as well. So that's our key support. If that one breaks, could be a very easy move back down here to 228.22. Again, that would keep us within our resistance trend line as well. Any support lower than that, and we're looking at 218.45 on the fake breakdown that we saw there. And after that, 212.85. And if things get real nasty, we have one more at 182.54. Again, that would take quite a bit of news, I would imagine, to get the prices down there, but we're open to all possibilities. Remembering to play the chart and not the headlines. It looks like prices sort of consolidating. The ranges aren't as big as they were back in this area of the chart, so do keep in mind that things are starting to tighten up. Volatility is starting to sort of come down a little bit, but not completely. On the upside, if we break out over our resistance trend line, we are looking at resistance to come into play at 256. If you want to round that out to a whole dollar there, anything higher, and then we have this sort of clear resistance point up here, and that area is at 263.02. As we talked about, that's the double top on the weekly. If we get above that, then we are looking at our next resistance point at 273. Anything higher, and we haven't really marked off much in terms of areas above, but we will just say that this area of the chart is our next resistance, as that is an area where price could not remain above. So that's at 288.20. So the Qs on the daily look slightly different. You can see that they have broken the downtrend and they are starting to form a new trend in which we see, higher highs and higher lows start to develop. Obviously on Wednesday, Thursday, Friday, that was not the case and we sort of went sideways. Our key support is here at 181.17. If you want to play that area of the chart as key support, the next flush point below would obviously be our next one, which is at 169.34. Anything lower than that is our sort of fake break area, similar to what we had on SPY at 165. Anything lower, and we have 160.25 cents. So keep that in mind to the downside. And our areas of resistance, it looks like we've sort of gone sideways for 3 days in a row. I would call this sort of range bound. So if we could break out over this resistance portion of the range at 187.13, 187, just call it a round dollar. Anything higher than that, and we're looking to move into our next resistance area up here at 192.61. You can see all the times that prices acted as support and then resistance, very clear resistance as it has attempted to get back up through it from the downside. Anything higher than that, and we have our level in here at 198.30, which our 200 SMA on the daily is going to start to coincide with. That will act as a super resistance, so expect a negative reaction to any sort of first touch into that level. Anything higher, if we did get any sort of miraculous breakout and continuation to the upside, 50 SMA is crashing down, but our next sort of resistance zone on the chart is up here, and that's around 209 to 210. And IWM looking different than SPY, the Qs, and it's sort of just doing its own thing. You can see it's gotten rejected way earlier than coming into its resistance trend line. Small caps sort of hurting here, as I think they've taken more of a hit in the economic downturn due to the virus as the rest of things. But again, just playing the chart, you can see a new downtrend, or a continued downtrend, where we have lower highs and lower lows starting to form is in place. We don't have those flat lows as we did on SPY and the Qs. So what I'm sort of watching for here is a move out of this downward channel that it's sort of forming. One way or another, it's either going to continue to remain in the channel and continue lower into our support here at $100.27. Anything lower than that, and again, we have $96 as our triple bottom in this area. If we can break out over this sort of resistance trend line of these 3 days that we've had in a row, then the next thing to target would be this double top that we formed here based on Wednesday, Thursday. That area is, let's just draw a price level in, that's right around 110.50 if you want to play a nice round quarter in there. Anything higher than that is going to be our resistance trend line, the major one here. And if we can poke above that, we have this area of resistance in the chart at 117.26, 119 or 120 if you want to just play this as a round dollar, and then a gap to be filled up to 124.20. But again, IWM being the wild card here, it's sort of showing a lot of weakness compared to everything else. I would sort of expect it to go downwards, if not sideways, rather tthan to the upside. If you've made it to this point in the video, I'm sure you're enjoying the analysis, so hit that thumbs up button. I genuinely would appreciate it, and I think the YouTube algorithm would as well. Let's hop into Apple. So on Apple, you can see that we are almost following the market with 3 days of sideways consolidation. We have our key support at 238.03. Anything lower than that, and we're looking for a flush down to 228.25. Lower than that, and we have the low of this hammer candle here at 212.81. To the upside, we have really this area of resistance to clear on the chart, which is at 245.15 if you want to play a round number there. Anything higher than that, and we see the break up to the upside, we're looking at a super resistance in here at 250.30 based on that 200 SMA coinciding with that level. Anything higher, and we have this very key level on the chart where we've gotten rejected multiple times in the past. That's at 256.35. Anything higher than that, we could see a move to the lower third of this sort of larger range in here where we got rejected on this inverted hammer. That's at 262.57. Netflix has sort of been in a flagging pattern for a little while now, where it's made a large move up, consolidated, pulled back a little bit, another move up, and right now we're in another period of pullback. You can see we're pulling back right into that 50 SMA, which this is sort of a support zone on the chart, not necessarily a level. You can see 361.79 to 356.84. This area is, has a lot of data associated with it, with the 50 SMA coinciding right in the middle of it. Really, it should act as a strong support zone. If we see a next move to the upside, we're looking for resistance to come into play in our resistance zone. That's at 380.41 to 375.50. Anything higher than that, and we're sort of going back to our quadruple top up here at 392.95, 393 if you want to just play a round number there. Anything to the downside, if the support zone breaks, we're looking for a move down here to 343. Anything lower than that, and our next level comes into play at 336.20. Lower than that, which is quite a ways away, but could very well happen, is our super support, where we have our sideways 200 SMA and this price level as well coinciding. That's at 321.21. Tesla's a little bit of a difficult one to look at. You can see it's sort of just gone sideways and chopped around for quite some time now. Large gap up on Friday. You can see price closed down here on Thursday and then opened way up here. So huge gap, but it filled to the downside very easily. And then it did find support at a key level, which we had noted at 470.71. Anything lower than that, and we're looking for a move to the low of this Thursday candle, which is in here at 447.21. Anything lower than that, move down here to 410.66. If we do see a move to the upside, we are first looking at resistance to come into play at this level here at 494.69. You can see all the times it's acted as support, and then rejection on Thursday. So we got to get back up above that before we can go to our next one, which is at 516.50. And you can see all the data points this one has associated with it. So that should be a very strong level of resistance. I would imagine the first sort of back away would be a negative reaction. If we can get above it though, next move up is at 558.57. Anything higher than that is 609.25. BABA, again, sort of following the market, just having 3 days of sideways consolidation on Wednesday, Thursday, Friday. You can see our new key support is somewhere in this area, right around 185.50. If we break down below that, we're looking for a move to 180.62. Anything lower than that is our next double bottom support down here at 170, the whole dollar. If we can get above sort of this downtrend that's sort of forming and break out above that, get back above that 200 SMA, then we're looking for a move back up into our 195.61 level. Anything higher than that is 202.05, which our 50 SMA is starting to crash down on. So expect a negative first touch reaction to that where we see a pullback, and then, we'll sort of reassess the chart from there. Facebook, you can see, is following IWM a little bit more than it's following the Qs or SPY even, in the fact that it's made 3 consecutive lower lows and lower highs. It is in a nice little downtrend here, sort of starting off with this inverted hammer right off of resistance. So congratulations if you got in on some puts or shorted some of the stock at this point. That's a nice play there. Inverted hammer, nice downtrend. Right now we are looking at key support remaining here at 153.90. You can see we did close slightly above it, but we did pierce below. So our next new support below will be at 150.78, the low of that hammer. If we continue lower than that, then our next support below is at 142.78 and then 137.23. If we do see any sort of reversal based on this hammer candle where buyers are stepping in, you can tell that our next resistance is here. This next one is really going to be 159.32. We got to get back above that before we can sort of target our next one at 163 and then 170.25. NVDA has been playing nicely with its sort of triple bottom as well, following the market there, some sideways consolidation. So same thing holds if we see a flush below our key support at 241.26, then we're looking for a move back down here to 228.03. Anything lower than that, and we have plenty of data to act as support in here at 216.27. Our resistance is going to be sort of a super resistance. You can see that our 50 SMA is also in this area as well. That's right around 255.26. If we can break out above that, you can see our next point of resistance is at 261.95. So 262, the whole dollar. And then, of course, our next inverted hammer high up here right around 273.23. Any sort of miraculous push to the upside again, and we're looking at 286.16. So Microsoft, again, inverted hammer candle here, nice pullback, and 3 days, however, they are all making higher lows, so that's nice to see that it's trying to remain in an uptrend and keep pushing to the upside. Our key resistance at this point is going to be anything over 156.47, in which case we're looking for a move up to here at 162.54. Sort of that 50 SMA is going to start crashing down on it, acting as super resistance once again, but we could see a slight poke through as we did with this large upper wick here. So watch out for a fake break over it and then getting rejected by that 50 SMA should we see an upswing. We're also having our resistance trend line could very well be in play if we see a major move to the upside. Anything higher than that, though, and we're looking at 174.21. To the downside, we are looking at support to come into play here. I would call it somewhere in this area right around 150.80. Anything lower, our 200 SMA will start to act as support as well. Anything lower than that, 147.13, and then large flush range to the downside should that break, and we're looking at 135.32 next. Amazon consolidating nicely, respecting our key support in here at 1894.50 just about. If that flushes, again, looking for a move back down to our 200 SMA here slightly. It's probably about 50% of the way in between our full range to our next support, which is at 1829.85. You can see this is more of a zone in here where price seems to have bounced out of it, found support in this area. Again, 1829 to 1810 just about. Anything lower than that, and you can see very, very little structure in this area of the chart, and we could see a move down to 1626. However, if we see the breakout to the upside and this bull flag sort of plays out, we're looking at resistance to come into play up here at around 1957. Our 50 SMA will start to coincide sort of around this area as well. So look for that to act as a super resistance there. Anything higher, again, this is a very similar pattern to many charts we've looked at today. We have our inverted hammer candle on Wednesday, or Tuesday rather, sort of poking up above to our next resistance at 1995. Anything higher, we're looking at 2032. 2086, and of course our all-time sort of highs up here should any major craziness happen to the upside. But again, I think we're sort of covered one way or another. So that's going to do it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to hit the thumbs up button. I really would appreciate it. If you're new to the channel, Go ahead and subscribe. These videos come out every weekend to give you an edge for the week ahead. Don't forget, we also have the Swing Trade newsletter. We're on Instagram, and we do have a live Discord server if you want to chat with myself and other traders. And with that, I wish you a green trading week. Stay safe out there, use stop losses, and wash your hands.